Ever felt like investing was this big, complicated thing reserved for Wall Street types in fancy suits? Like you needed a secret handshake and a whole lot of money just to get started? Well, that's where apps like Acorns come in, promising to make investing easy, accessible, and even automatic. You link your bank accounts, it rounds up your spare change from everyday purchases, and boom, that small change starts working for you, investing in a diversified portfolio. It sounds pretty sweet, right? Effortless investing, a way to grow your wealth without even really thinking about it. But then the big question pops into your head, the one that keeps you up at night whenever you're trusting your hard-earned money to something new. Is Acorns safe? That's exactly what we're diving into today. We're not just going to give you a simple yes or no answer. We're going to unpack what safe really means when it comes to investing apps, look under the hood of Acorns, and give you the information you need to decide if it's the right place for your money. Think about it. When you hear safe, what comes to mind? Maybe it's the feeling of your money tucked away in a familiar bank, insured by the government. Or perhaps it's the peace of mind knowing that the company handling your finances has a solid reputation and follows strict rules. Now, investing is a different ballgame than simply stashing cash in a savings account. There's inherent risk involved. The value of investments can go up, but it can also go down. So, when we talk about the safety of an investment app like Acorns, we're not just talking about whether the app will get hacked or disappear overnight, though that's definitely part of it. We're also talking about how it handles your money, the types of investments it makes, and the safeguards it has in place to protect your financial future. To really understand if Acorns is a safe investment app, we need to break it down into a few key areas. 1. Security of your personal and financial information. This is probably the first thing that crosses your mind. You're linking your bank accounts, sharing personal details. You want to know that information is locked down tighter than a drum. Acorns uses bank-level security, which means they employ encryption to protect your data both when it's being transmitted and when it's stored on their servers. Think of encryption like scrambling your information into a secret code that only authorized systems can understand. They also use multi-factor authentication, which adds an extra layer of security by requiring you to provide more than just a password to access your account. This could be a code sent to your phone or a biometric scan. Furthermore, Acorns doesn't actually hold your funds directly. Your money is held by their partner custodians, reputable financial institutions that are subject to strict regulatory oversight. This separation adds another layer of protection. 2. Regulatory compliance and oversight. Financial institutions in the United States don't just operate in the Wild West. They are subject to a whole host of regulations designed to protect investors. Acorns is registered with the Securities and Exchange Commission, SEC, which is the primary regulatory body overseeing the securities industry in the U.S. This registration means Acorns has to adhere to certain rules and reporting requirements. Think of the SEC as the financial world's watchdog. Their job is to ensure that investment firms are operating fairly and transparently. Being SEC registered doesn't eliminate all risk, but it does provide a level of accountability and oversight that helps protect investors. 3. Insurance and protection of your investments. This is where it gets a little more nuanced. Your investments with Acorns are typically in exchange-traded funds, ETFs. These are like baskets of different stocks and bonds designed to track a specific market index or investment strategy. Here's the important part. Your investments in these ETFs are protected by the Securities Investor Protection Corporation, SIPC, up to $500,000, including $250,000 for cash claims. This is similar to how the FDIC insures your deposits in a bank. So, if the brokerage firm holding your investments were to fail, your securities would be protected up to these limits. However, it's crucial to understand that SIPC insurance does not protect you against losses in the market. If the value of your ETFs goes down because the stock market declines, that's not covered by SIPC. That's the inherent risk of investing. 4. Diversification and risk management. While Acorns can't eliminate market risk, it does employ strategies to help manage it. One of the key principles of investing is diversification, spreading your money across different types of assets to reduce the impact of any single investment performing poorly. Acorns offers different portfolio options with varying levels of risk, ranging from conservative to aggressive. These portfolios are typically made up of a mix of different ETFs that invest in a wide range of stocks and bonds. By automatically diversifying your investments, Acorns helps you avoid putting all your eggs in one basket. Furthermore, Acorns uses a strategy called dollar-cost averaging. Because your investments are made gradually over time, through those roundups and recurring investments, you're buying more shares when prices are low and fewer shares when prices are high. This can help to smooth out the volatility of the market over the long term. 5. Transparency and education. A safe investment platform should also be transparent about how it works and provide you with the information you need to understand your investments. Acorns generally does a good job of this. They provide information about the ETFs in their portfolios, their historical performance, and the fees they charge. They also offer educational resources to help users learn more about investing. Understanding where your money is going and the potential risks involved is a crucial part of feeling safe and confident in your investment decisions. Potential downsides and things to consider. While Acorns has several security measures in place, it's not without its potential drawbacks. Fees. Acorns charges a monthly subscription fee, which can eat into your returns, especially if you have a small account balance. It's important to weigh these fees against the convenience and potential growth. Limited investment options. Acorns offers a curated selection of ETFs, which might not appeal to more experienced investors who want more control over their investment choices. Market risk. As we've emphasized, all investments carry market risk. The value of your Acorns portfolio can go down, and you could lose money. This is not a flaw of the app itself, but a fundamental aspect of investing. Dependence on automation. While the automatic roundups are convenient, it's important to still pay attention to your overall financial situation and ensure you're comfortable with the amount being invested. Set it and forget it can be useful, but it shouldn't mean completely ignoring your investments. With that said, thanks for watching, and until next time.